Good morning, everybody. Welcome to the Flow Show. Not a good start to the day with some of these headlines being pinged around. But, they are what they are, and we have to deal with them. Morning, Michael. He came in sort of back. He's got some issues with his internet PC setting up in his new place. So he's having to sort that out this morning. Hopefully he'll be back on board and working in full from tomorrow, but he is popping into the chat room where he was this morning. So yeah, should be back tomorrow. And then I'm going to take 3 weeks off. Only joking, of course. Right, let's get through it. PBOC, they're still fixing in the 719s, so keeping the brakes on the currency there. 1911 was the fix today. Over in Japan, we've had a bit of waffle out of the finance ministry, with Kato saying that it's important for currencies to move in a stable manner, blah, blah, blah. No real big rhetoric change there. Bloomberg reported, though, that Japan and China sold a lot of US treasuries before Trump's election win. So that's one of the reasons why we saw yields rallying as they did. They offloaded quite a chunk. Whether they get back in to buy them on Trump is another question altogether. We are seeing a bounce in the price of treasuries today on the back of the risk headlines, which we'll get to in a bit. Over at the RBA, we had the minutes out overnight, and still they're leaning very, very much to the hawkishly cautious approach, not ready to cave in to rate cuts just yet. The board is vigilant to upside inflation risks, and policy needed to remain restrictive. They saw no immediate need to change the cash rate, so it's not possible to rule anything in or out on future changes in the cash rate. They noted that the forecast based on the technical assumption that the cash rate is to stay steady until mid-2025. They said they would need more than one good quarterly inflation report to justify a rate cut. I wonder how much that number is. If they get 2 good quarterly inflation reports, maybe that pushes them towards cuts. Who knows? We won't know until we get their Q4 data. As usual, they considered scenarios for both hikes and cuts, but overall there wasn't much dovishness in that at all. Still, as I said, talking very cautiously about upside risks to inflation and keeping rates restrictive. BOE's Green talking yesterday. We've currently got a few of those bods speaking to a Treasury Select Committee at the moment. I'm glad it's happening while I'm doing the Flow Show, because it means I don't have to listen to it. But Bailey and Mann and a couple of others are waffling on at that. But BOE's Green was speaking yesterday, said UK services inflation is elevated but on a downward path. She says services inflation and wage growth are not falling as fast as she'd like. Says the budget will raise UK inflation, and the risks of cutting too early is greater than moving slowly. So a little on the undovish side for her. ECB's McClough, and we were laughing about this yesterday, and we're laughing about this today, given the Ukraine-Russia headlines. McClough said the job is not done, but nothing is likely to go wrong now. And so there's no need to rush. Nothing except for World War III. So good call, Mr. McClough. Well done. He said a prudent, cautious approach is best on rate cuts. ECB Stonoras says a 1/4 point debt cut is more or less a done deal. 25 pip cut is an optimal reduction, and says that we should expect a number of ECB rate cuts, and we could be at a 2% rate towards the end of next year. ECB's Wojcik says the risk of inflation undershooting has picked up. ECB's Pancetta says if domestic demand remains weak, inflation could fall well below 2%. The ECB should move to neutral monetary stance or even expansionary if necessary. One thing to take from all these ECB bods, they've all got different warnings, opinions, and whatever. So these discussions that the Governing Council are going to have are a bit all over the place. Like Wojcik, he's worried about undershooting. There's a couple of others who are worried about inflation undershooting. Pancetta may want to move rates to an expansionary stance rather than just getting them back to a terminal neutral level. So these discussions are going to be picking up. The longer we go, the more they cut. Could be a bit of fireworks going on amongst the ECB Governing Council meetings moving forward. Not a lot of data out yesterday. We did get the NAHB Housing Market Index, which showed a decent improvement up to 46, beating expectations of 42. That was expected to drop back a pip. So more good news from the housing market. We get housing data this week. I think we've got starts and permits today. Yep, there we go. Starts and permits today. So keep an eye on that as well. That's for October. The NAHB was for November, so a bit ahead of that. Bank of Canada needs to keep an eye on this one. CPI data from Canada later on. Headline CPI is expected to rise to 1.9% from 1.6%. Some of those core measures are a bit all over the place. Some unchanged, two unchanged, and one expected to drop. Bank of Canada core number is at 1.6%. Keep an eye on that. No expectations, but if that drops, even if the headline goes up, then the market will probably focus on that number. But overall, headline inflation, as said, expected to rise to 1.9%. If it's a soft one, though, that's going to pretty much nail on market expectations for another 50 pip cut going into December's meeting. So just keep an eye on those. We are just playing these expectations now for the last monetary policy meetings of the year. There was a New York Fed survey out on consumer credit, and the survey noted that there's largely stable consumer credit demand, but it says that there's been an increase in rejection rates on credit applications. That's been happening all year, and it's picking up a bit. That means people applying for credit are getting rejected. Now, that could just be a bit of caution on the side of lenders, higher rates, judging affordability of those sorts of things. But if that demand, or if that those rejections pick up, that means that people might start to find things a bit of a struggle. So that could impact things like retail sales and the like. But it's been happening for most of the year, so it's not new news, but it has picked up a bit. Those rejection rates, will keep an eye on that one. Right, on to the risk headlines. If you've just woken up, if you're just sitting down to your screen, we've got lots of goings on in Russia and Ukraine. First off, there's been another cable attack, if you like, or damage happened between Lithuania and Sweden. That had the Lithuanian Navy out and about, saying it has increased monitoring off territorial waters and is assessing further action with allies after the cable was damaged. Obviously, no one's taken any blame for it, but everyone's pointing the usual fingers about that. And then we got headlines that the Kremlin or Putin had updated and signed the new updated nuclear doctrine, and saying that it contains very important text. And then we had Press Secretary Peskov commenting about the US allowing Ukraine to use its missiles in Russian territory, saying that Ukraine using Western missiles may cause a response, and that obviously that response could be nuclear in nature. So we're all stepping up the escalation. It's been coming. We know it's been coming, but today it seems the market wants to pay attention to it. And apparently the Ukraine has made its first ATA CMS strike inside Russia. So more bombs are being lobbed. Now, we've got to take this in to context. Okay, this was always going to be happening, likely that it was already happening anyway, but the market is paying attention to this. As Mark noted in our chat room, there's been lots of lines in the sand that have been walked over, and then more lines in the sand have been drawn. So we're not at a point where we're on the cusp of World War III or anything like that, but this is, and we've been saying it for a while, this is been heading for escalation, and this is the escalation we're in now. So expect a lot of chest beating from both sides. Let's hope it just stays as talk, but buttons are being pushed on both sides. We don't know where this will lead to. We don't know what the responses is going to be, but the market is going to be very jumpy about this going forward. Now, keep an eye on your usual risk assets. The yen's found a bid, gold has found a bid, bonds have found a bid, yields dropping back, dollar had found a bit of a bid, depending on where you're looking at. So we've got a lot of this going on at the moment, and risk headlines don't care two monkeys about coloured lines on charts. Okay, so just be careful. We're not seeing massive moves on risk, but the market is paying attention, so you need to watch for those headlines. So I'm here on gold, might as well stay there. I thought gold might have done a bit more on those sort of headlines. So again, it just gives you an indication the market's listening, but it's not reacting massively at the moment. That could all change, of course. We finally resolved this 25.90, 26 zone yesterday. Above there, we're now moving above this 26.22. Haven't really had a retest of it. So I perhaps wouldn't rely on it too much, this area, just yet. If we get a de-escalation in headlines, then gold may be coming all the way back down pretty quickly. Conversely, if we continue in this vein of headline that we're getting on risk, then it could very well pick up and continue higher. So don't trust the levels too much at the moment. Just keep an eye on it, as depending on what headlines get thrown at us. So I'll show you what happened in yields, or rather the price. So we obviously had that decent hold down there, which coincided with the 450 level. And now we're seeing a decent bounce. We're not getting anywhere close to turning this around. Okay, so this might just be a bit of a dead cat bounce. Again, it's going to be headline driven. De-escalation headlines, we're probably going to come back down to 109s, below 109s, down towards that low 109s area. So pretty quickly, this trend isn't turning. We're not even close to the 38.2 of this trend yet, and that's my measures for whether trends are turning around. So long way to go to turn this around, but it depends on how the headlines go. But don't think this is the end of the story. 415 yields, that's it. That's a top. It might be, it might not be. You've always got to judge what is driving these moves at the time. It's not Trump, it's not the economy, it's geopolitics. So keep that in mind. Oil, again, another one you'd think maybe would go up. I'm not sure if this feed is still a bit funky, so let's just kick it into another one. It seems to be working. So yeah, we had the rally yesterday. It hasn't really done anything more now, which is slightly unusual when you're potentially just about heading to World War III. You'd expect things like oil to rally the same as gold, but it isn't. So oil market's not really paying much attention or taking much from it at the moment. As I said earlier, there's moves that are happening in some places. They're not that big in others. Dollar yen, that's obviously where you want to be looking at. So we come down to this 153, 40-ish area. We did have a little nosy below it, got down to 27, 28. But we haven't got through it. So it's holding up. But again, another headline, we'll probably go straight through that without much fuss, in which case we'll just need to keep an eye on the 152 level if we do that. Likely, we're going to see 155 solidifying as resistance on any rallies. This is probably in rally sell mode for a bit longer. Of course, unless we get any sort of de-escalation headlines, then that might give it a bit of green light to get back up there, and then we can decide what it wants to do at that level. Dollar CAD, that took a bit of a whack yesterday, as did the dollar, again following yields. What's going on there? So we got down a nice couple of holds so far against the 140, which is what you want to see when you've had a decent break. This is a decent break. So while it's holding that 140, you know, I'm going to say it keeps the momentum going. It doesn't rule out another run towards those highs and 141. Though I suspect it's got a bit of work to do now. We can already see we're finding a bit of resistance just into that area there, just off the back of that pullback that we saw after the break. So just these little levels just to keep an eye on. The next one's going to be up here, 140.70 again, to see whether that solidifies a bit more if we get a move up there. Potentially we're going to set up for a bit of range playing like what we had down here, 140s. So keep an eye on that. I'm still long. I might, if we get a move up there, I might chop a bit more of my 140, 10, 11 entry that I did last week, just to take a little bit more off the top side price up here. I'm still long from 139, so I'm not worried about that part, but I'll just take a bit off the 140s entry just to stick a bit more in the bank while we've got these headlines going on. Cable still looking a bit meowish, got up to near 127. Then it's obviously been hit by risk. Again, now we're back below this 126.45.50, and it's looking like it's trying to hold a little bit at the moment. Just coming to a little bit of a shorter time frame. So you can just see in there, we're just trying to hold it again underneath it. But yeah, I think this one, again, if we get a de-escalation, then we might go back to what we were doing yesterday. Okay, so keep an eye on this 126. I don't know, I might have a little nibble. Depends on why we get down there, because it showed up as support previously. We're now holding support just above around this 14.15 area, which is a bit of a level. If you look back, I don't know if I can show it here, if I can go back far enough. Probably not. Let's go there. Probably can't see it, but just in there we had similar levels around the 10.15 area. So it's matching those at the moment when we test it. So back below there, 126s. If we hold that again, then that might be a good entry for a bit of a long to see if we can go and take out that 127 area. But again, know why we're moving. Euro dollar as well. I thought this one was looking a bit pretty late last night. As I sat down this morning, we had a move up above 106, albeit briefly. I've had this zone in just for the short term. This is the area we've got to chew through. We got up near close to it. 106.07, I think we got to last night. Couldn't get through, and now we've come all the way back. We have held this top of this zone, give or take a few pips. So it's just starting to creep up, just higher lows, albeit 5-10 pips apart. The same with the highs. We're just creeping up, so it's trying to have a go, but obviously this poxy Russian Ukraine stuff has shot that in the arse. So now we're back looking a bit weaker. So yeah, another one I'll keep an eye on. If we get another test one down there, 105s, I might add back to my position. I also might think about adding on a break if we get a break of this level up here, 16, 10, 11, because that might mean we're going to put in a half decent short-term bottom, might get us up 106.5, maybe even to 107. So I might think about doing that, headlines permitting, of course. Bran, you do a lot of learning. I want to see you doing some doing. Put into practice what you're learning, okay? You've been learning for 2.5 years now, if not more. So it's now time to start putting it into practice, mate. You know, what I'm talking about today is not new news to you or anyone else. Right, I don't know, where should we look around? Where should we look around? Again, folks, if you've got anything you want me to look at, put it in the chat, please. Give me something to talk about. Dollar China. This one, again, this might have been something I thought might have moved a bit more on the risk headlines because China's going to be wrapped up in this. The fact, and as far as I know, they've been quiet. They've been quiet on this latest stuff. Usually, you'll come out and talk about restraint or something. But they've been mumbling around their G20 meetings and whatnot. So this one, I don't think we're done with the upside just yet. I'm still looking potentially have a look at some shorts if we get up to this area, but I'll keep a close eye on that one because it's looking like it's just going a bit sideways at the moment. Dollar MEX, haven't looked at this one for a while, but we're down into a bit of a support area just against these old highs that we had up here. So we're just coming into it now. MEX has sort of come off the radar a little bit since Trump's win. We're holding up with a weak MEX since the election, not looking like it wants to dip too far back until we get whatever, but this is an area, if we're back under here, sort of 110, 18, 10, 09, whatever you want to call it, this zone here, then we may be heading a bit lower, maybe back towards the 19 area. Conversely, if we hold it here, it's going to keep this move in play, and maybe we get a push back up towards those highs. What else? Dollar Swiss, David, of course, my friend. Let's have a look at dollar Swiss. This one's, again, now I've looked at this first thing this morning and I thought it might have been doing a bit more on the risk headline. Euro Swiss, just to switch quickly, has done a bit more, as you can see. So in terms of the Swissy, because it's a bit of a mixed risk picture in terms of what's moving and what's not. So Euro Swiss is moving, so we're definitely getting the bid in the Swissy there, but dollar Swiss isn't as much. We are right down on this level here, 88.20-ish. You can see it's a former level through there. So again, we're finding this as support. We had a little niggle through the 61.8 fib, but we're back below. Topped out just ahead of this next level, 89.25-ish. Something about the 20s for this pair. So if it's going to bounce, this is where you want it to do. What are you doing, David? You long? You short? Let us know. But if you're long, then you don't want it getting back under this 88.20, more so maybe the big figure as well, under this old fib. If we're back under there, then we're heading lower. But you want to go long, nothing yet. So this is the thing with trading risk headlines. Okay, you've got a trend happening. Okay, we're already in the middle of a trend, and there was a reason for this trend, mainly dollar strength. Okay, it's been given a knock by these risk headlines. If we get more risk headlines, then the price is going to, Swiss is probably going to, or Swiss pair is going to come down further. So it's a case where you then start to match up the risk headlines with the fundamentals. Keep the fundamentals in the back of your mind, okay? The reason why this was rallying in the first place. So if this risk headlines, we get a bit more and you get a decent dip, then maybe you want to think about getting in that dip because if things de-escalate, market's going to revert back to what it was doing before the headlines. Likelihood is any dips that you get in here, we start going back up and we get back towards those highs. So if you want to get long, David, yeah, I think that's probably a sensible play, but you've just got to pay attention to these headlines. I suspect that at some point things will dial down. I hope they dial down anyway. But I think we're probably in for a few more sessions where we might get headlines popping up hither and thither, and they're not going to be overly great. So be a bit picky if you want, or if you want to start getting long, mate, then think about maybe just reducing your trade size, maybe factor in a few more levels over a wider range, spread the trade out a bit, rather than, you know, sticking a whole trade or whatever you do normally on one level. Spread it down a bit. So, you know, if you do get some headlines coming down and it keeps going and going and going, you can just spread a trade out. Also means that if you don't like the trade, you don't have to put as much on. If you find you know, bought a little bit here and you bought a little bit here and a tiny bit here, and the headlines keep going, well, you don't have to keep adding. You can say, okay, enough's enough. I'm going to sit back for a bit, small position, and you know, if it doesn't turn, fine, I'm going to lose, but I'm going to lose a smaller amount than I was going to do set out. So there's ways of playing risk headlines. The market maybe get a bit too fearful. If it gets to that extreme level, then you can think about maybe getting in a counter. But yeah, I think maybe we're going to see these headlines filtering through for a bit longer. Haven't discussed Aussie dollar just yet, mate. Dimitri, again, you know, very similar to what we've seen in a lot of pairs, dollar pairs at the moment. We've had a bounce, decent bounce off support, got above the resistance area. I said yesterday this was too tight a range to sit in for too long. 64.40, 64.80. We're above. Managed to get above 65.10, but we haven't held it. We're back down, and look what we're testing. Testing the 64.80. So technically, if it holds here, that's your decent support point to maybe get a move back up to 65. Back under, then we're back in the range. And maybe we just open up the range a bit, maybe trade 64.40 up to 65, 65.10 again. But if you weren't long and want to go long, then, you know, you can always give it 5-10 pips off of this level, see if it holds. And if it doesn't, you're not going to break the bank doing it. What are you doing, Dimmy? Let me know. I'm still short Aussie Kiwi. This is coming back down again. Had a little move. This 110.50 area. It's a bit of one of those on-off levels. It's not an exact number. You know, we have these little moves through 50, 60, that sort of area. But we haven't got and held above it. If we'd have held above that today, then I'll be thinking we get another move up towards those highs that we've been here before, up towards that 110.95, 111 area. But it hasn't held it. So, yeah, I want to see what happens if we get a retest 110.20 again. Because, again, we just may be building up a bit of support down here, higher lows, which means we might get a move up towards this area again. Maybe the possibility of a break and a push up through 111. I'm keeping an eye on that one. Still short, as mentioned. I'm still happy to add. I'll keep this one if I can until the RBA start turning. But we've got the RBNZ to come as well, and a lot of the market getting all 50 picked up for that meeting. So there's still, as I say, still might be a bit more upside to come on the back of Aussie weakness. Right, you've shorted 65.10, aiming for 64.50. Well, nice trade, Dimmy. Pretty much bang on the dot up here. So yeah, I hope you get it. I don't know if you've taken some profit already. Maybe keep an eye, as I said, on that 64.80. If you don't get through there, you might need to think about what you want to do with that. Maybe you want to take a portion off just in case we don't get through there. Right, anything else for anybody? Or let's have a look at stocks quickly, what they're doing. Have a look at the old S&Ps. Oh, get the right chart. Again, I thought stocks might be off a bit more on these headlines. Obviously, it was trying to bounce coming into today, and it's taken a knock. But we're still not really resolving this level, 58, 75, 70, 80, whatever you want to call it. We keep having these probes below, but we can't hold below it. So, you know, dip buyers are coming in. They were trying to come in yesterday. They've been given a bit of a slap this morning, but they don't seem to be out the game just yet. I think we've got to watch what happens when the US opens and how the US reacts to those headlines. So don't get sucked into a full sense of security with a lot of these assets and pairs, because if the US come in and go, oh, this is trouble, what's going on in Ukraine, they might decide to hammer risk a bit at the open, and then maybe for the rest of the day, depending on the headlines. And of course, we've got to wait for Mr. Trump to see if he has anything to say about it. One of his big promises was to end the Ukraine-Russia war within days of becoming president. So we haven't heard anything thus far. Let's see if we get anything from him today, or even Biden as well, seeing as he created this mess for Trump to sweep up. Right, I don't know what else you want me to talk about, so maybe we'll call that a day. It's been a good half hour's worth, get you up to speed on things. As I said, keep an eye on that Canadian CPI. I will be, as I'm trading the loonie. See what that number brings. Have a great day. Have a safe day, everybody. And as I'll repeat again, just be a bit cautious with those headlines and how you're trading at the moment. Go into protection mode if need be until things settle down. Have a great day, everybody. We'll catch you all tomorrow.